Yeah, I thought we could talk about more about commercial loans as business owners are looking to expand their businesses. I think it's always good to be intentional about how you're taking on debt. We've talked about debt before, and this question kind of came up where I was thinking. When business owners go to get a loan of any type, but especially commercial loan, when they're looking to expand, I think as nature would have it, we would want to always go to look for the lowest rate. And that's not always the best solution for where you are in your business. So the question is, when does it make sense to not take the lowest rate on a commercial loan while you're expanding?
Yeah. Yes. Yeah, that is coming. And, people kick themselves when a recession does happen and they've got the loan. Typically, when the lowest rate that is offered is usually from an institution that has the most automation. So they have the less amount of people to actually handle a call when there is an issue. So if it is a loan that is not really, your business is not dependent on, maybe it's siloed, maybe it's a quick little auto loan that only the auto is used for collateral. There's no personal guarantees. That could be a quick little, okay, I, got the quickest rate.
Sure.
Small, $10,000.
If you're going to buy a couple vans or moving trucks or
correct.
Okay.
Yeah. Maybe Ford Motor Credit had their 0% and run those as quickly as possible.
Right.
But you do know you're not going to be able to ever say, sell that and have that note carry on with the other person.
Yeah, right.
It's not transferable, but yes, in those circumstances, get the lowest rate. Get the lowest rate on your autos.
It's very transactional.
Yes. Now, you're looking for your business. You want to look at where you're going to be in the future. How integral is future financing going to be with you? How, you bought that commercial business and you financed, your largest one in your life, So that's your biggest payment every single month.
Yep.
What happens if, sales go down 30%? Mm-hmm. Typically, if you went the lowest cost provider, you're going to call them up. They're going to send you in a queue for months on end. Meanwhile, your payments are going to be late and they're going to put you in a bad position. Mm-hmm. So that's what happens. And, really, this is where community banks thrive because when there is an issue, a community bank's going to answer the phone. They're going to talk to you and they're going to look at what can be done because they don't want you to be late.
Yeah. There's more of a relationship there.
There absolutely
is.
And
probably there's a relationship from the time you sign the loan to the time you might have issues in your business. There's lots of back and forth up to that point. It's not
the only thing that is predictable is unpredictability. I've never seen a business plan go exactly to plan. That just doesn't happen.
Sure.
You don't know what you don't know. And, really the sales, I've never seen the sales in a business plan hit what they think they're going to hit.
Yeah, right.
They just don't.
Yeah.
But they're excited that, hey, here's the potential. Usually they don't notice all the expenses and all the fees that are associated with running a business. They just compile on over time and they just keep increasing.
Right.
So yes, how integral the loan is to your business in the future, you need to look at a relationship and rate.
Got it. So it's thinking about the future is really the main takeaway there is, you don't know what you don't know because you're just starting this expansion or you're just starting the business. So you don't know what the future holds. So you're going to need someone there as an ally, as an advocate for you. That is integral in your growth.
Yeah. And everything that you do in life, when you put yourself in a bad situation 20 years from now, you put yourself that way by making little decisions years before. Mm-hmm. And this is one of them. You may give them, that bank may be $75 extra a month, but the reason that bank is charging that is because they want to be here for the recession.
That's right.
Because what happened in 2009, which, I remember very well when real estate market collapsed and, the banks that weren't just foreclosing on you, the ones that had strong capital and the ones that had strong capital And I'm not saying that they, were behemoths and they're taking advantage of people, but, they knew that they needed money for the next day. So because what happens during a recession, regulators, they want to clean the books and they want banks to foreclose as quickly as possible and kick that out.
Right.
And during a recession, when there is a rate modification, because something has happened in that business, it is then classified as a bad asset on the bank's books. Mm-hmm. And banks want to purge those as quickly as possible. And that's usually to the detriment of the customer because, maybe they can't afford. Right now, commercial rates are 7.25 to 9. I mean, they're getting up there. So, I mean, what happens if you can't afford 8%, but yet you can 5%, because something has happened in your business sales in 2023. Mm-hmm. Well, if that's $1 million loan, that's $1 million bad loan on the books of that bank. And if that bank is already a little bit in trouble, they're not going to reduce your rate to 8 and 5. They're just going to go foreclose and cut their losses.
Yeah. And so to me, that kind of speaks to trying to search out a bank that has other loans with businesses like yours, because then they have sort of maybe, I don't know if we call it an asset class, but they have a class of businesses they're loaning to on purpose because they understand how those businesses work. So when things do go bad, they're not going to fold. They're not going to, call your loan. They're not going to,
no, they're going to know your market.
They're going to know exactly what's going to happen.
And they're going to know that, okay, you're a good operator of that business. It is external measures. It's the economy. It's this level. You're not doing anything wrong. You're not taking advantage of the business. You're not hiding, income and your revenue. You're doing what's right. It just is reduced and it will work out over time. So, but if that banker doesn't understand your industry, they may just think you're messing up.
Yeah. They don't,
you're not paying attention.
Then they don't know what they don't know.
Yes.
Yeah. So kind of interesting. So when you're looking at commercial loan rates too, and from what I've seen, it's usually a couple basis points difference. It's never like five.
No, it's not
5 points,
And in 2009, we had a big concentration on gas stations and hotels. So it would take literally a 30-minute conversation with that owner to see whether or not it was them that were causing the problem or was it just the economy, and it'll work out over time because no other operator is going to do a better job in what they're doing. Mm-hmm. And so, yes, go into a lender that understands your industry.
Yeah, I like it.
Thank you.